Good morning and welcome to another Mocha Money Monday. I'm Ashley Scott, your host, and today I am with Anthony DeLeonardo. I'm sorry, I messed that up. I gotta get this right. Anthony DeLeonardo, right? Anthony
Yes.
DeLeonardo.
Yes. Good morning, Ashley. How are you?
I'm well. Good morning, Anthony. Now, Anthony, you are the managing partner and head of underwriting at Corporate Capital Solutions, and you're also doing your thing at Flagstone Financial, correct?
Yes. Yes.
Awesome. So you've been in and managing and originating loans for over 20 years. So
Yeah.
I want
10.
to really talk more about that and how you help businesses and entrepreneurs to get the capital they need to scale and grow. And I just want to learn more and more about you and how you got into this business in the first place.
Sure. So I'll take you a little bit through my journey. Um, I came right out of school and onto a Wall Street loan origination business lending company, fresh out of school, and funded 15 deals my first month.
Wow.
So I came out swinging, but so I did that for a bit. We were doing all sorts of small business loans, lines of credit, a accounts receivable based lending, all types of different things. And I was doing really well. Had a team of about 95 people under me. Ran all new hire training, and helped really expand the firm's um, rep base pretty well. And it was a good run. And then I got a really cool opportunity actually to go to work for a firm in Dubai. So I picked up, moved to the UAE, which now it's pretty cool. My whole life is coming full circle because I'm getting ready to go back there. But I went to go work for a consulting on large projects, which is kind of what led to the next phase of my career, construction financing. But I was working on all sorts of large projects for large companies, pharma companies, manufacturing companies that had global presence and wanted to really figure out their real estate plan and how they were going to globally put themselves in the best situation possible. So I consulted for a lot of these big companies on their real estate, where it was going, what was next, so on and so forth, and other initiatives they had, whatever they had for me, basically. But that was the focus. So that was a good run. I came back to New York and went to go work for a company called WBL, where we had a hybrid business lending backed by real estate program. But I mean, it was a good opportunity for me to learn. I was still pretty young, and it's a good opportunity for me to learn from veterans in the industry. That's kind of what I did there. And I ran the whole South and Southeast territory of the country. I managed all the brokers from all that, which is how I ran into Danetta during that time because she was in Atlanta. Um, but yeah, so I had Atlanta, Florida, Texas, the whole South, and I was up in New York. So that was a good run for about 2.5 years, and then yeah, about 2.5 years into that, I met my partner Chris in a merger, and we started Corporate Capital Solutions about 7 years ago. And CCS had a division of that did small business lending, SBA lending, which I had a pretty serious background in, which is basically a science. I could talk for probably 2 hours about SBA lending and all the different types of programs out there. But it's complicated, and you certainly should get someone like myself to help you guide through that. Otherwise, you're setting yourself up for a roadblock. Honestly, it's pretty good stuff, but it's just tough. You need to know how to navigate the what is. Um, so we did a lot of that, and we also did real estate lending. So fix and flip loans, commercial real estate loans, acquisitions, a lot of construction loans for business owners that had warehouses, that had farms, all types of things like that, commercial buildings, downtowns. And then that kind of led us up to COVID from there, was I would say is the next point. And as we all know, that was an absolute disaster in the financial markets. I mean, I woke up and We lost like 40 million in our pipeline. I mean, it was a wow day, to say the least. Um, and we were trying to figure out what to do. We have a lot of I have a lot of different political connections with different local mayors in the state of New Jersey, different senators' offices in New Jersey, in Tennessee, and Arizona. They're all calling me for answers. Like, everyone's going to be unemployed in 3 days. I'm like, yeah, I understand. Let me figure it out. So I literally, it's funny. I was telling this story 2 days ago, to someone else, but I sat there in front of my Excel sheet of all my contacts and literally called them one by one, just
Mm.
down the list until someone answered. Bank contacts, SBA contacts. As we all know, the PPP lending was coming out, right? But it was an absolute cluster.
Mm.
So some of my really amazing people out in Missouri, in the Ozarks, and out in California decided they wanted help. So we took down, I think, about 320 PPP loans in 6 weeks.
Wow.
We saved 1.6 million jobs, and there was 9 of us at the time. So
That's dope.
yeah, it was pretty cool. I mean, it was rough. It was 7 a.m. to 2 a.m., 7 days a week for 6 weeks. That's what it
Mm.
was. We just powered through it as much as we could.
Well, I want to get a little bit more. This is good stuff, and I want to get a little bit more into the interview because, like, your
Yeah,
background and just all of the loans that you've originated, all the different layers that you've seen. I'm just curious to know, just like, what is the best kind of business when you're going through this process and you're trying to get somebody a P loan in COVID, or if you're
uh-huh.
trying to get somebody a loan today by today's standards, what do you need to see to be able to help people best?
Sure. So, I mean, different animals to it, but from a business standpoint, right? Just regular business owners, retail, manufacturing. Uh, I think industry wise, be careful with what you choose, right? Because we have a very crazy economy at this moment, absolutely crazy. And I think the staples of the country are kind of what's churning along: regular retail, manufacturing, distribution, all sorts of Amazon businesses. I'm a super big fan of all of that distribution. I think is amazing. Um, you know, I'm a big construction fan, so I mean that's always going to be a part of my life and my career.
Mhm.
So I've helped tens of thousands of construction companies across the country and getting them operating loans and doing loans for projects, which is really what my passion is. So I could speak a little bit about construction lending if you'd like me to go into that.
Yeah.
So there is rehab loans. And I think a lot of people don't really know that because they just don't. So, um, I mean, America is a very old place, right? And there's a lot of cities that have beautiful properties that are 70 years old, we'll call them, and they just need new kitchens, new floors, new bathrooms, structurally sound. Walls are decent, location is good, and that's been something I've done a lot of is do what's called fix and flip lending. So we help Joe Smith acquire the property and do a construction loan, right? Usually 75 to 80% of the purchase price, and 100% of the rehab is what we cover.
Okay.
And in hopefully 6 months, maybe hopefully less, the property is finished and they have a new certificate of occupancy, in which then we on our credit line, which is pretty cool, I'm able to bring it full circle for the borrower and get them a long-term DSCR loan so they could rent it out to a tenant. Once they have a tenant signed lease and deposit, they're eligible for what's called a DSCR long-term loan. So they'll go from a loan with a rate in about 10.5, 11% on a construction loan to a long-term loan about 7.25 to 7.5%. And that's it. And it's a good cash flowing asset that every month you're banking some good money, and hopefully you have a decent property manager and everything goes well. And they call it the BRR, I think, concept is what it's called.
Mhm. Yeah.
Um,
buy, rent, and repair. Well, buy, repair,
Rent.
renovate,
Yeah.
rent,
Yeah. And
repeat,
then do it over and over again, right?
repeat.
So I
Mm-hmm.
have clients across the US, in Detroit, Memphis, Seattle, I mean, San Diego, all over South Florida, where I am now. That they do that concept in single families, triplexes, and then multifamily, which is a whole different animal, but also good potential. You know, and a lot of the reason I'm pushing that direction is because new construction right now is very expensive. Our inflation's insane, and it's just expensive. So I'm trying to push people to do rehabs. It's not easy for everyone to wrap their head around, but if you have the right contractor and the right relationships, it's very doable. I'm working on doing two myself right now. So with partners, clients of mine, and they wanted to do Florida projects, so I'm running the show for them down here.
And so what do I need? If I'm somebody, I got a couple of clients right now. I'm a real estate agent. I have some folks at BlackRock. They have good credit scores. They've got a little money because they've got that six-figure job, but they might not be someone who has ever done construction in their life. They're transitioning and they're looking for new opportunities to build wealth and build a portfolio for retirement. How
Mhm.
do I get them involved in these types of projects? And what do they
Great
need to
question.
have?
Great question. I've been down this quite a few times. So I mean, they have two options, right? And they're different, right? Option A is they buy a stabilized property that has rent upside, is what I call it, right? Maybe the apartments are renting at, for example, 800 a month, but the rent potential is about 1100 a month. Pretty common. Um, so those tenants turn over, you do a little updating, paint, maybe redo the bathroom, something simple, not too costly. And you increase rent from 800 to 1100 for your next tenants on all 3 or 4 units. Same thing, same contractor, same thing. Go in there and knock it out in a month and turn it over. So that's one good, simple option for that person. Uh, Option B, I would say, is to do kind of what I was speaking about before in buying a rehab, a light rehab project, right? I personally like heavy rehab, but I think someone coming into it fresh, light rehab is good. So that's, doing new floors, new kitchen, new bathroom, and calling it a day, and landscaping, which is important, and calling it a day, which generally one GC, general contractor, could manage that for that individual you're speaking of. So just find one good GC. I probably could recommend one for you in most major cities in the US, um, and get it done, right? It's having one good quarterback to run the show is crucial. Too many chefs in the kitchen is not what you want on a rehab project. I've seen that happen many times and it always goes bad. So
Okay.
one good
Now,
quarterback to run the show.
that this is all exceptional advice, and now I want to kind of kick the ball to another side of the field and talk a little bit more about businesses and entrepreneurs, right, and real estate financing, because I have a client. I got a lot of different clients. He owns a really great property. He's a mattress manufacturer.
Okay.
And when I see these kinds of like legacy stabilized businesses, a lot of times they don't own their real estate. So I'd be
Mm,
interested to hear more about your thoughts about how these kinds of stabilized businesses that have good cash flow, how can they start to change and transition what their even, business can look like when you think about real estate and having that as an asset?
love the question. I love this. Okay. So mattress manufacturer, you said, correct?
Yes.
Where is he?
Fulton Industrial Boulevard in Atlanta, Georgia.
Atlanta. Okay. So now we could go really granular and get into numbers, or I'll just use rough numbers. So he's probably paying about 20,000 a month for rent. I'm just gonna guess, right? And if he has good credit, decent business, is eligible for what's called SBA 7A loan, which gives that borrower up to 5 million to borrow. Now, if the property purchase price exceeds that, it'll then be a SBA 504 loan, which is a different program, a little bit more complex. I like to stick to the 7A loans personally. And I've also heard that they're making exceptions now up to 7 million. So I personally really like 7A better because 504 just involves different things and it's a little more complex. And I don't think, a lot of people don't have time for that, honestly. So 7A loan, this mattress manufacturer could go from paying 20,000 a month to probably about 5 or 6 thousand a month, right? And
Big difference.
improve his cash flow by about 14, 15,000 a month. Because, if real estate is involved on a 7A loan, then it is a 25-year term versus the standard 10-year term. So now you're on a 25-year AM, which is much longer term, much longer amortization, creating much lower payment for that individual. So, I mean, I haven't really seen an example where it didn't help the borrower. And the good thing is, it doesn't just have to be purchasing the building, right? If you wanted to, I am all about purchasing the building, doing inventory, so on and so forth. So I give an example of, a project I'm working on in Naples, Florida right now. So we're helping him purchase his storage unit, which it's not really storage. We'll call it a warehouse workshop. And he's saving $7,000 a month on the loan that I structured. And we're combining it with large inventory purchase and reimbursement for all the rehab that he did to his existing showroom. So it came to about $3 million, give or take. So we're putting all those different things into one, breaking each down individually, but roped into one loan because you don't want to keep doing these loans. It's a lot of work. It's a lot of time, closing costs, attorneys. It's just a lot. You don't want to do 3 of them in your business career. I don't agree. So I think doing one larger loan is much better. And if it takes you longer to get to the point, wait, Now there is other programs such as the SBA Express loan, which, that's a whole different thing. It's an unsecured loan up to 350K that a business owner likely will be eligible for, and that could work out for them as well. So you could take these express loans while working up to the big 7A loan with someone like myself.
That makes sense. And so now when I think about the retail, you got really giddy, a little excited when you were thinking about Amazon type businesses. So people who do have these products, I work at the Russell Innovation Center for Entrepreneurs. So I think about entrepreneurs like Chanel, and she has play pits, right? She's got this dope deodorant brand, shampoos, all that stuff.
Okay.
And she probably could easily use $350,000 just to keep up with her Target orders once a month. But that's not enough, right? So when you need to have more, what are some of the things like can you get like I really want people to think bigger, and like you're talking about, roping these different things into a $3 million loan. If I'm somebody who is just, maybe selling some products, I got my shea butters, but I got a booming business because when people like what they like, they buy a lot of it regularly, right?
Sure. For sure.
How do I take advantage of this stuff, Anthony?
So the Amazon user, I would try to point them in the direction of an unsecured, right? SBA 350K loan, express loan. There's several different companies that issue them. And there's also the SBA Bolt program, BOLT. That's another option. That's up to 500K. That's another really cool program out there, which is really suited for the borrower that you're speaking of, right? So for them, the whole premise and focus of their loan is going to be inventory purchase because they could buy, 10 times the inventory for 1/10 the cost and increase their margin by 20, 30%, something like that. So for example, I'm going to give you a large example. And it's not really Amazon related, but it's similar. So I have a down on the shipyards in Louisiana, very cool place, may I say. I have a client who's an electrical contractor for these big ships, and Project X is a huge client for him. So they're doing all the ships for Project X, all the space ships, basically where all the rockets are landing on. Pretty cool stuff. But they need a ton of cabling, right? Because that's their main thing is cabling. So what we did is we found a vendor from Turkey, from Istanbul, to produce an insane amount of cabling for like $4 million. And we funded with an SBA loan. We roped some of his other debt in, did the $4 million purchase from this vendor. So we saved like 65, 70% because he was getting so much cabling, right? And we funded it, I think, 100%. And he saved 70%. He increased his margin by 70% because he got so much quantity of cabling. So same concept, right?
Yeah, and it's cool because this is what scaling really is all about, right, Anthony? When you think about how to make more money for your business and how to be able to serve more people, you have to think about how can I get it cheaper, faster, and still you want to maintain that quality, right? And I think that's where these larger quantities of money come in so that you can do, this kind of growing for your business. So
100%. I mean, you have to look to increase margin wherever you can, right? And if you go from an average margin of 17% average business owner's margin to 30%, 32%, build on money will build on money. Yeah. So
well, you've given us a lot of quality insights and information today. I want to give you the last word. Like, what is it you want to leave the audience with when they're thinking about how to grow, how to scale their business, some of the best moves that they can make? What do you want to leave them with?
mm. so I'm a very big risk taker. So um my piece that I would leave you with is, go take that leap, take that shot to take your business from $2 million a year to 5 million the next year. But in order to do that, you're going to have to take a shot. You're going to have to do something, increase your margin by 20%. You're going to have to buy that building, to get that warehouse, to have that inventory, to create those sales. Hire that manager, move yourself from all those day-to-day activities so you could have the large vision to, go to the next level. Hire that manager. So that's what I would leave everyone with.
That's such great advice. Thank you so much, Anthony. How do people stay connected with you? Are you on Twitter? Are you on Instagram? Where are you?
So I am on Instagram. I'm at Patterson12, and I'll drop the links in there. And Twitter, I'm Big Tony 9391. I'm also in the crypto NFT world as well. So my Twitter is more geared towards that, but that's a good way to connect with me. I'm on Twitter all day. And Instagram is at Patterson12. I'd love to speak to any entrepreneur that has questions or in regards to real estate finance, business finance, SBA lending, any of those topics.
And I'm sure you are a part of our phenomenal Hughes Global Network so that people can connect with you on as a part of our network as well. So
Yeah,
thank you so much for being here today, Anthony. And thank you all for tuning in. As always, Mocha Money Mondays is brought to you by the Phenomenal Hughes Global Network and Wilson's Financial. You can get the help you need to become a bankable CEO by tuning in to Mocha Money Mondays and joining the Phenomenal Hughes Global Network. Visit phenomenalhughes.com and get connected with us and just be a part of such a vibrant community where we call ourselves the epicenter of phenomenal women. So thanks again, Anthony, for being here today. And we look forward to connecting with you again on another Mocha Money Monday so we can get a little deeper into this crypto and these stable coins that you're building. All right.
sounds good. You have a good day.
All right. You have a good one. Bye.
Bye.